Good evening, everybody. Welcome to the Winning Edge Trader Market Strategy Session for December 20th, 2015. Hope everybody is doing well. Let's go over the economic reports. Short week this week. Nothing on Monday, final GDP on Tuesday, and existing home sales. Core durable goods, core PCE, durable goods, personal spending, new home sales, revised University of Michigan sentiment on Wednesday, Thursday morning unemployment claims, and a half-day trading session for Christmas Eve. And then Friday, Merry Christmas, everybody. Bank holidays in France, Germany, Italy, and in the U.S. No trading session, not even a ghost futures session. Let me make sure I am correct on that. Half day on Christmas Eve. I think I'm correct, but I could be wrong. I am wrong. It is not a half day. Or is it? I can't remember. Well, maybe it is. I can't remember if it is, if it's a half day. Can somebody tell me if it's a half day? I think Scott said it was, but Paul, is it a half day Thursday or not? Yes. Each market will close early at 1
Wednesday's a half day.
Yeah.
I mean, Thursday's a half day, sorry.
Thursday is the half day. Okay.
Christmas Eve during the week is always a half day.
Right. What about New Year's Eve?
No, full day.
Right.
Always, they'll never close early on New Year's Eve.
Yeah, for the rebalance. Okay.
For the what?
For the case there's any end of year rebalance BS going on.
No, that's not why. They don't want to lose any business overseas, number one. And number two, most importantly, it's because they did a huge volume on last day of the year.
Right. People are making their allotments and stuff.
Oh, I think I meant index rebalancing.
No, not the official. No, they couldn't do it. There wouldn't be enough time. Okay, so last week, market had some fun. Of course, depends on who you are. We gapped up, sold off, bottomed out, rocket shipped higher. I mean, from the lows to high was 4% over 3 days, and then gave it all back Thursday and Friday. Fed did raise rates, whoop-de-freaking-do. Paul, will this be the last time they raise rates for the foreseeable future, or what's your opinion? Are they going to do every other month? What are they doing here?
I'm gonna opine that they do March, June, September, and December of next year.
So it'll be up to one. There'll be a full 1 point raise when it's all said and done.
So we'll be at 1.375 a year from now. But I mean, my thinking is, Yellen said countless times that the liftoff is going to be very shallow and gradual. So don't expect it at every meeting. I don't care what Lacker says or any other idiots. And number two, we're not exactly, the economy is not exactly growing. I mean, jobs, the non-farm payrolls are decelerating, so job growth is still positive but decelerating. You get too many indicators that are going the wrong direction, so I think they're going to do it really slowly. And I would say if I'm wrong because they raise rates even less. I'd be shocked if they raised rates more than 4 times next year. One thing that no one's talking about yet is, I don't think so, the voting members of the Fed changes dramatically in January. So you go from majority of doves to a majority of hawks. So the predisposition of the Fed in 2016, the voting members are rate risers.
Okay. Now the big question is, does Santa Claus come to town? It's not too late, but usually the Santa Claus rally has already started by now. We are at support, which is right around the midpoint of this W, whatever the heck it was, in August and September, back down to the Monday low. Can we get a bounce into the end of year? Yes. And even though I switched gears during the middle of the week, remember last week at this very time, I said the big thing is not going to be new highs on the year now, new all-time highs. The big focus is going to be, can we close green on the year? Then in the inner circle members, after the big move on Fed Day Wednesday, which we did capitalize on, the one winning trade I did happen to call last week because we got a couple of stop outs, although I shouldn't tell you about them. I should just lie and say I'm the best ever and we never lose, but I don't know, something bothering me that I can't do that. I don't know, maybe Paul could do that. I thought after we cleared this 50 and the 200 with a bullet on Wednesday, I thought after we got the Golden Cross, and not because I think the Golden Cross carries any weight, the Death Cross surely didn't. Death Cross got destroyed. But I think people will look at the Golden Cross and look for hope and say, okay, now we're over it. Oh, and look, we got the Golden Cross. Oh, boy, it's time to buy. So I thought maybe we could get some tailwinds from people that are going to jump in because of that stupid pattern. But of course, we didn't. We gave it right back. So I flip-flopped. Let's see. Starting last week, I said we'll be lucky to get green on the year. Then I changed and said, okay, we have a shot to get the new highs on the year again. Because after Wednesday, we were only 2.5%, and we're only 5 points away. That's not really that big a deal. And now again, guess which side I'm on now? I am on the side of still looking to see if we can get green on the year now. I think that's going to be the main focus. I do not have, maybe Paul does, but I do not have a screaming buy signal right here. I don't have a screaming short signal either. After two big days that equated to about a 4% clipping, 4% haircut, I do think, maybe a little less than 4%, whatever it is, but we'll round up. I do think that this is a spot that we could get a bounce from. But to me, I'm going to have to take it off of an intraday chart. Just buying because it was a big down day Friday and saying, wee, let's just buy. Yeah, I don't know. Gap down, maybe my mind changed. Maybe a gap down that retakes the low, right? If we gap down here or wherever, I'm just estimating it does. We don't have to gap at this level. We gap down and then we trade up through Friday's low. That could be a potential buy signal. And why I like those buy signals is that you know where your stop is. You know where your stop is. You could be very, very tight. I got a couple of questions on the January effect list. So I haven't really finalized this with Paul, but I guess we'll talk about it either tomorrow or whenever. But we may be doing a January effect list this year. I just got to see if there's enough time to get it done. There are a ton of candidates. There are a lot of sectors that are beaten down, a lot of stocks that are beaten down, and there are also a lot of stocks that are performing well. The other side of the January effect, the markup into end of year, which is another little spin we put on it, which has actually been doing okay the last couple of years. So if anybody's interested in that, drop me a line at tiny@winningedgetrader.com, and everybody will get the 15 emails if we hold the class anyway, but just in case you want to be on the priority list for that. All right, and of course the Inner Circle folks get it included with the Inner Circle membership. So that's it. I wish I had more to say. I wish I was clearer on things. Maybe Paul is. So I will hand over the microphone and screen to him and see if he has anything clearer as far as buy signals going on here. And that's it. Just, Paul, please text me when you're done. I'm going to probably be here, but text me anyway.
Okay. Okay. Let's dive in. So regarding, I'll answer Tiny's question first. Regarding kind of fresh buy signals, I don't have fresh ones for based on Friday's close. All the seasonal stuff and a lot of the oversold stuff that I look at came in on Thursday's close. So Thursday's close begins the most favorable time of the year during the most favorable time of the year. So this is really the sweet spot for the market right now. You've got kind of sort of 2 weeks left, but we know in those 2 weeks you got January 1st and the Christmas, so you've got 8, is that right? 8 trading days left. 1, 2, 3, 4, 5, 6, 7, 8, 7.5 trading days left. A bunch of trends are open right now. So one, last 3 weeks of the year, the Russell is, when it's down into the last 3 weeks, it's almost always up the last 3 weeks. So that's one trend that I posted on my blog. I didn't see where we are today. So the 10th, where's the 10th? So the IWM, that's not the big of a deal. The IWM have to close essentially 115, which is really a 1 or 2 day move. That's no big deal. You have the 3rd year of a presidency, although the 2nd term, it's really the 7th year, the year ending in 5. So all of those means that the market, the S&P, is supposed to close the year positively, although the real trend is it's supposed to close the year hugely positive, which it's not going to. The question now is, do we close the year green? I'm going to stay on the same side of the table I've been on, and that is, yes, we close the year green. The last 2 weeks of the year, which are obviously very, very, very favorable, the strongest last 2 weeks of the year, if my memory is right, were 1990. It was 1991, and we ripped something like 8-9% the last couple of weeks of 91. That was a very different market than this is. And then the second strongest last closing 2 weeks was, I think, 2011, which I will pull up because I can do it quickly. So that was, this is the Russell, that's why it doesn't look right. That doesn't look right. Hold on a second. That's 3 weeks that's 2 weeks of the year. Oh, yes, it does. It's right here, right? So this is the run. The last 2 weeks of 2011 was right here. We ran into the new year, and we blasted off in 2012. So do I think we're going to go 4%? I don't, but we could certainly go 2 to 3%. That wouldn't shock me. If we went down, would I be worried? I'll say this: if we're down from here to year end, I will certainly be more concerned than I've been in a long time. I'll be as concerned as I was back in here in the summer in July. So we're not supposed to be. This does not look good from a price point. I'll say this also: if the market's going to bottom and run into year end, it's going to bottom tomorrow or Tuesday. I don't think we're going to be talking next Sunday, still hanging around waiting for a low. So you've got this low here in November, which is, we'll call it a bullish engulfing. We've got a nice hammer that retested that low, and we're retesting this low once again. So If we're going to hold, the bottom comes Monday or Tuesday, in my view. Okay. Last week, as Tiny said, we had a bunch of ups and we had 3 ups and we had 2 downs. The 2 downs were pretty big, tall red candles, which I absolutely hate. You all know that. We ended the week a touch lower than we started. To me, it feels like that the Bears just had a big victory. And breath was negative. Breath has been very inconsistent. On the up days, it sucks, and the down days, it's pretty good on a relative basis. So there's something funky going on beneath the surface regarding breath. Let's see what else. That's it. Friday's big down day. Trend was only 166, so we got no trend signal. We're up a tiny bit overnight. That's irrelevant right now. And we shall dive in. Okay, so here's the Dow. Looks just like the S&P. I'm going to remain with my same thesis that this is breach to the upside. So could this be a fake out to the downside and then an immediate run to the upside? Sure, it can. Could we collapse from here and go down? Certainly. I don't see it, but it's certainly possible. But I like this look that we can in the new year take out these highs and then go right back to all-time highs. S&P a touch weaker, but kind of sort of the same. I think I told you guys this last week. I was planning on selling my position in the Dow, which I did, and I bought some more small caps and mid caps. So I rotated out of the Dow into the riskier indices and the ones that are supposed to rally into year end. We shall certainly see. Mid caps clearly don't look as well from a price standpoint. They look weaker than the Dow, which I sold, and the S&P, but the setup is the same. The market goes, they're going as well. The small caps, we're in the very short term, they're still holding above their December lows, but again, they got a bottom the next 2 days, I think, and then begin to mount a run higher. I still think they get above this. Will they do it by year end? It's unlikely. If it does, I will celebrate. Maybe by a tiny, if the Russell gets above 120 by the end of the year, I will take Tiny out to the steakhouse of his choice.
You wish. It ain't getting to 120. There's no way I can win that bet.
All right. Well, if it does, I will take you to the steakhouse of your choice.
But just remember, I can't eat a lot, so now I have caviar mostly. If you're gonna, it's gonna be a lot.
You know what, buddy? It'd be my pleasure to buy you the caviar.
You're all witnesses. I'll never welch.
Wait, I've never welched on a bet. You know that. You can call me a lot of things. I always I pay out my bets and I buy gifts. Give me a break. All right, so 120 by the end of the year, and Tiny gets a meal in the city. All right, so those are the U.S. indices looking for a bottom Monday and Tuesday. Europe, and then I'll look at Europe, emerging markets, and stop for questions. Here's Europe. We've talked about it for a while. It looks like a pair of twos, trying to behave constructively, but you would have thought that the bottom would have been here, and we should have been much higher here, not down there. So nothing really, in my opinion, to do on VGK. Emerging markets, no one's talking about it. They were the big winners last week. Emerging markets rallied last week. Pretty good rally of note. I didn't do anything. I still own positions in FXI and EWH. FXI rallied a little bit, so obviously happy about that. And EWH is kind of the same thing. I have to get them a little higher to sell them right into year end. Maybe 5% higher, but we'll see. Let's see. Russia before you guys. Oops. Before some fat fingers. Here's Russia, trying the bottom again. Here we go. So if you want to give Russia a shot, your stop is really tight. Really tight. Close below this little hammer. All right, let's see. Let's look at the questions. Scott, no, a quarter point 4 times next year gets it to 1.375 because the Fed's new target is now, what is it, 25 bips to 50 bips. So their Fed funds are currently trading at 37.5 bips. But I don't think they're going to follow Yellen next year. I disagree.
What?
You got a Fed full of hawks who will pressure Yellen. She's not going to get away next year. She loses a bunch of her allies. Why are small banks doing well? Well, so I'm sure most of you saw that when the Fed raised rates, all the big banks immediately raised their prime lending rate. So they were lending, I think prime lending rate was, it would go from 4 to 4.5, 4.25 to 4.5. I can't remember. Where's the prime? So what happened was the Fed raised rates, and all the big banks raised their prime lending rate. At the same time, they did not, I'm going to do Wells Fargo. At the same time, they did not increase interest on any deposits. So what did the banks do? They just said, our spreads are going up. We're going to do much better now. Bank rate. Yeah, this is old. Okay. So maybe they went to 350. 350? Doesn't matter. I can't find it. I apologize. So small banks are rallying because Fed raised rates. They're going to charge more for interest, but they're not going to pay you more. Okay? That's really bullish for your net interest margin. So I've talked about this for a while. KRE is a beneficiary of that. It's the regional banks. I also think 2016, one of the things in my forecast will be that you're going to see a lot of bank M&A, a lot of deals, and the deals won't be from the Bank of America, Wells Fargo, Citibanks. It'll be smaller regionals buying tinier banks. Let's see. All right, so Scott asked me, I called Dow 20,000, but so I forgot if I told you. I was on CNBC this week. I'm sure the link's on my website. So I was on CNBC doing a story about Apple, which I was negative on Apple. I didn't say Apple's going down 50% like I did in 2012. I just said Apple's days, yeah, here it is, as Apple turned rotten. So I think Apple's days of leadership are over. Done, kaput, finito for this bull market. Best case to me is Apple's a market performer. Worst case is it's really bad. I think Apple sees probably 70-ish during the next bear market. Not exactly any kind of earth-shattering forecast, but Scott said, how can you be positive on the Dow but negative on Apple? Don't forget, the last phase of a bull market when the Dow or an index melts higher, not all the components will be strong. Apple could go from 106 to probably 120. That's 14 points, which would yield you about 90 Dow points. But the other Dow stocks could lead the market higher. So we don't need Apple to go anywhere for Dow to go to 22,000 or 25,000. Right? Apple will rally. I just think it will lag. To me, Apple looks like GE did in the end of 2000. This is the end of the era for Apple. Investor sentiment is beginning to get pretty bearish. Yeah, but you got to be careful because investor sentiment moves week to week, but it's only really useful when it gets extreme. So just because it's gotten more bearish, it could get a lot more bearish and still before it gets extreme. And also, obviously, we need investor sentiment to be extreme and the market to be at a turning point. Because if you remember in 08, and maybe that's a bad example because 08 was a generational event, but in really good declines, sentiment will get negative and stay negative for a while. As Joe Granville said, in the bear market, the bears are right. Okay. Let's see. Cook is on. Oh, see, that's right. Tim Cook's on 60 Minutes tonight. I have it VCR, not VCR, DVR. Let's see. What's your opinion in respect to the new Fed rule requiring Wells Fargo to take on more debt? I'm not familiar with the rule, so I can't comment, or else I definitely would have a comment. Let's see. No, Scott, I'm not calling for a bear market. What I said was during the next bear market, I think Apple will go to $70. So I think the highs are in for Apple, regardless of how long this bull market lasts. I think the highs are in for Apple. Now, if we get another pretty solid correction, that lasts 6 months or so, and we go down 20-25%, could Apple lead out of that? Yes. But the way Apple behaves and the way the market behaves, I think Apple is done leading. Period. And again, Scott, you don't need Apple to participate. It's only one of 30 stocks, right? And it's only a $100 stock. You have Visa, which is in a bull market. Visa could run 20 points from here, and that would give the Dow 140 points. So those are only two stocks of 30. Remember, look at Alcoa, when it was a big Dow component, it only went down, down, down as the market went up, up, up. Remember, the Dow is not cap weighted. The Dow is price weighted. Big, big difference. So the highest price stocks have the most weight. I think the Dow multiplier is 7-to-1 now. 1 point in any stock equals 7 points in the Dow. Did you ever see a time when the market has a serious pullback? Do I ever see a time? Yeah, I saw it in July. Thought the market was in trouble in July. So yes, I do. And the market hasn't fully recovered from July. This, again, folks, this is the end of a bull market, meaning if it's a football game, you're in the fourth quarter. The fourth quarter can last 3 months. It can last 23 months. You normally see a couple of stocks get all the glamour, all the love, which you're seeing now, and that typically doesn't change during the fourth quarter of a bull market. So I'd be shocked if the real laggards got off the mat and began to lead the market higher. Whatever leadership we're getting should be the leadership throughout the rest of the bull market. think the company can. Do I think Apple will defend its stock price? They got $200 billion of cash, so they can buy back shares, they can increase the dividend, but I don't think they're going to defend their stock price. That if they start buying back shares or raising the dividend, that makes me correct, because that's what mature companies do. Companies that can't find good uses for money have to increase dividend and buy back stock. That's not what leaders do. Leaders invest in growth. So I'd love to see Apple increase a dividend. That would turn the stock more from a growth stock to a value stock. Are you concerned going forward with respect to how weak IBM, Mobile, Caterpillar, Walmart are looking longer term? No, I'm not concerned short term because that's a characteristic of an aging bull market. You begin to lose stocks, kind of one by one. And remember, some of these stocks have already seen their bull market peaks. They could still rally into a top. But stocks that are currently the glamour stocks, like Netflix. I mean, Netflix is still close to the highs. This thing can go from 118 to 150 during the last quarter of the bull market. Google. I mean, Google can run 800-900 during the last run of the bull market. Amazon can go up $100 in a month. I'm not saying they're going to. I'm just saying at the end of a bull market, wacky things happen. Good thing they took X out of the Dow. Yeah, but that's what the Dow does. The Dow has survivorship bias. Although, if you do the homework, stocks that come out of the Dow tend to perform better than stocks that go into the Dow. No, I don't think Apple can't be a growth stock and a value stock. Look, remember Microsoft. Until recently, Microsoft they were carrying $50 billion, which seemed like forever. Okay? And I mean, Microsoft only started leading recently. Since the dot-com bubble burst. There we go. So from when Microsoft bottomed back in 2002, it was a laggard 2002 all the way to 2013, and then started taking off again. It was essentially a decade of lost money in Microsoft, and that's what I think. And people would have said, no shot Microsoft could lag like that, and the market could be in good shape. So, and everyone would have denied this could happen way up in here, and lo and behold, it took a decade, or actually it was more, for hurt the home builders. I think the rate increases in the home builders has been, for the most part, baked in the cake. A weakening economy will hurt the home builders more than the rate increases will, because I think what you're going to see is a flattening yield curve. So remember, home builders trade off of the 10-year yield. Home builders trade off of the 10-year yield, which has really gone nowhere all year. It's gone pretty much sideways. So a lot of this rate increase for the home builders has been baked in the cake. Let's see. Scott, what was August 24th? Besides the fact that on the market we had a flash crash. Apple. Do you think energy is going to continue to fall? Jason, do you mean energy as in the commodity or the stocks? Yes, I know the huge drop was in August, but the time to forecast weakness, Scott, wasn't in August. It was in July, where I think I wrote about and I talked about it here. On my blog, back in July, I spoke about the market looking really bad. I forgot what the title was, but I remember trouble brewing beneath the surface on July 20th. The more I analyze, the more I don't like. The number of stocks is rising up and encouraging, blah, 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 blah. That was July 20th, so I think that was pretty good. Yeah, that was right. That was a 1 day off the peak here. But once the market begins to unravel, it's hard to turn bearish. Either you get it right early or you don't. Sometimes you're right, sometimes you're not. Jason, I'm going to cover the energy in two minutes, so hang tight for me. And that's a question for Tiny regarding Twitter. He's the stock guy. I have absolutely no idea. Thanks, Mark. Okay. Let's see, 2 more questions and we'll rock on. Do I think it's time to sell Apple? No, Scott. I would try to. Well, I would want to sell Apple calls during a run. I don't like selling them down at 106. So I look for a run to come, or maybe implied vol to expand ahead of earnings, which can be a little dangerous. But I'd have a tough time selling them down here. Dean, I've written a lot about money velocity falling. This is not a news story for me, but it's a here. Oh, that's a terrible picture. So this to me epitomizes my feelings since 2007. You've got money velocity peaked all the way back in 1998 and has been falling ever since, except for one period of time when the Fed raised rates last decade. Now money velocity is at all-time lows, and that just it's how often you turn over a dollar in the banking system, money velocity. That's a problem. So Dean asked, do I think that it's going to start turning after the next recession? I do. I think after the next recession, a lot of things are going to turn. Money velocity is going to be one. That will begin to go up. Inflation will begin to go up after the next recession. We'll have a whole new leadership group in the stock market. I think it's after the next recession you get the Dow goes to something like 50,000. We got a little ways to go before we get to there, but a lot of things normalize, from my view, after the next recession. Oh God, that's funny. So Scott asked if because the money supply is so high, does that affect money? It doesn't affect the calculations. What it means, guys, you're asking how can money velocity be buried with so much money in the system? Because the definition of money velocity is how often a dollar is turned over. So with $4.89 trillion in the Fed balance sheet, why isn't money velocity higher? That's what you're asking. How could that be? And that's because instead of the banks putting all that money to work and turning over the money over and over and over again, the banks are keeping right now $2.5 trillion on deposit with the Fed, earning essentially 1/4% risk-free. That's why money velocity is buried. So all that money printed, they didn't really print cash like bills, but the money printed that was journaled to bank balance sheets is just hanging out at the Fed. That's a problem. That's a structural problem that'll have to get fixed, but it'll take time. Gun to my head, I would say 2018-ish is the time where a lot of things come together. All right, we got to forge ahead or else I won't be able to watch Homeland. And I'm exhausted. For the first time all fall, my wife and I went out Friday night with the neighbors, and they're kind of wild, so we ended up at their house across the street with a huge bottle of, what was it? Pineapple-infused vodka that was marinating for a week. And then last night we went to a holiday party that was fairly raucous and risque. I don't normally go. I normally go to Vermont. My wife goes to these parties alone. This year I went, and yours truly ended up in a quarters game, harking back from college, with tequila shots. So we went through a full gallon of tequila during this quarters game. It was a very late night and ugly night. So let's see. Yes, Scott. Yes, it was adults, and yeah, a lot of inhibitions were thrown out the window last night. Luckily for me, had the wherewithal to take pictures, so I've got plenty of blackmail material for people. All right, let's bang this out. I'm going to go kind of quick because it's 8:40 already, my time. Let's go to the four key sectors. Semiconductors. I've said it for months. They're the leader. They still do not look bad, right? They have not done anything wrong. We have higher highs. We have higher lows. If we can put in a low quickly, they could see fresh highs by the end of the year. I still like semiconductors. Consumer discretionary, which I've liked since the low in August. They're not great, but they're still not disastrous yet. Also, they put in a low right now. They could run towards new highs by the end of the year. So we've got this one I'd rate on the positive side of neutral. Semis I rate positive. Banks. Clearly, the KRE, which is the regional bank, is the one I'd rather be in. I think there's more M&A there, but KBE, kind of the same look, needs to bottom quickly, or else it's going to roll over ugly. I thought banks would be a whole lot better the last quarter of the year, and they're certainly not delivering. But they got a bottom right now. And finally, the trannies just were awful this week. They got hit upside with an ugly stick. We have a new closing low for 2015 with the trannies. That is not good action. It kind of also, this is what you see towards end of bull markets. It's not good. It's ugly. I did not expect the trannies to collapse and fall back down to a fresh low, closing low for 2015. They're already below everything. They got a bottom right away. There's no shot, in my view, they're going to lead anytime soon, but they certainly could bounce. I said they'd take out this peak here. That's a pretty good move. I'm not going to dismiss them yet, but clearly I'm concerned that this may be their peak for a while. Before one of you asked, Jets look still good. The airlines are leading the trannies, which means the rest of the trannies, the truckers and the rails and the deliverers look really crummy. So airlines are just printing money left and right. Oil keeps going down. They're giggling at the world because fares are going to go up and they're saving more money, and the deal there. Okay. So I covered all four of the key sectors. Software still looks fine. Someone will point out to me, this looks like a head and shoulders top, and I agree with you. It does look like a head and shoulders top. Microsoft does not agree, thankfully, if you're a bull. That's good. And neither does Adobe. So you got two of the bigger software stocks look pretty good still, thankfully. Very bull. Telecom. Very short term is holding above the recent lows. Looks like neutral at best. No comment there. Diversified financials look a little bit better than the banks, but kind of sort of similar. Nothing really there. Let's see. XRT, they still stink, the retailers. They're not falling as bad as they did. We talked about this for a while. This is a classic case of a laggard. They lift their head in a rally, and then they lag phenomenally during decline. So this one clearly is not anything you want to go near. Home builders we covered already. XLI industrials look a little weaker than the market. It is not because of the dollar, right? Because the dollar has not been strong. It's not going to be strong. The dollar had a one rally day on Thursday. That's it. So the industrials are not weak because the dollar was so strong. They're just weak because they're weak. Material stocks, kind of the same thing, look like industrials. They've been correlating very well second half of the year. That's unusual. Let's see. Healthcare looks good. Healthcare and biotech both are trading in this very tight range. Tiny would say They are coiled up and ready for a move. He'd say, which way, we don't know. You've got a bearish engulfing pattern right at the 200-day moving average. Does that matter? We will see. You know, my view is it's going to resolve itself to the upside. Same thing with IBB, although a little bit weaker. Still looks pretty good. Tight range for a while on IBB, the biotechs, but it looks like they still want to go higher. XLE, we're retesting the lows. So oil has collapsed, to Jason's point. The stocks are just testing their August lows. I do not, believe it or not, for the first time in a while, I do not have an opinion if they're going to have a successful retest. But we're going to find out in the next couple of days for sure. OIH, same thing. Retesting the lows from August and early October. Triple bottoms typically don't hold. Triple bottoms typically don't hold. But we'll see what happens the next couple of days. Let's see. The internet sector, which I own and still own, doesn't look bad, doesn't look great. We'll go dial down because of the bad tick. Here it is. It's got another one. It's got a bottom next couple of days. The defensive group, IYR, the REITs, does not look bad. So, one, does not look bad. The REITs, defensive group. Utilities, nothing that I'd want to run out and buy, but doesn't look horrible. And XLP, which I own a big position in, got murdered on Friday, much to my unhappiness and disappointment. Got murdered on Friday. It was only, we're 2 days from the highs. So the defensive groups do not look bad, which is also something very typical of a late-stage bull market. Okay. Solar power group. This is a surprise to me because solar power typically rallies when crude rallies, and this is a monster rally, and crude has done anything but rally. This is definitely a break from its traditional correlation right in here. Reversal day on Thursday, hung in really nicely on Friday in a horrible tape. So solar, the TAN ETF is one you should keep an eye on. Gold. I said the same thing week after week. I don't have a good feel here. Gold bottoms typically don't look like this. They're much more spiky and V-like. So to me, it's nothing to do in gold. I think that covers all of the sectors. Let's see. Scott, I sent some pictures around to some friends so they know that so my buddy's wife was involved with my wife in some of the interesting pictures, so they're in some good hands. If Jets is printing money, shouldn't that help? No. Oh, Scott, you're kidding around about that. Let's see. TAN got tax credits extended from diversion from oil. Yep, Dimitri, I'm going to get some I will go to natural gas and bonds. Government sending subsidies to thank you on the solar. Jason, I'll cover sugar in a minute, I promise. Is that a sloppy head and shoulders on GDX? I do not. Well, let's go to Barrick and Newmont. So here's Newmont. Here's Barrick. Let's see the volume. So I would not call this. This is bottoming for sure, but I wouldn't call it a head and shoulders bottom. And Newmont, no, I wouldn't call it a head and shoulders bottom either. This is very atypical for gold stocks. Very, very, very atypical. Okay, let's forge ahead. The dollar, which I said a couple of weeks ago, this huge day turned me. I'm still long-term bullish, not changing there. But this, to me, said we've gone from a very strong move to, at best case, a sideways move. Maybe we go sideways with a slight tilt to the downside. The dollar will be going higher, just I don't think it's yet. I think we got months left for this to digest this huge down day. FXE looks a little better. Obviously, the dollar's not looking so great. FXE looks like a good short-term trade to the long side. But again, I'd say any strength you get in FXE is a long-term short. So long-term, short-term may go up, long-term is still going down. Same thing with the yen. Nice inverted hammer. If you owned it, to sell it and get short. Probably go a little higher again. Look for reversal and you can sell it short again. Same thing I said for, I don't know, 2-3 years. Anytime the yen rallies and you get a reversal, sell it short. Make sure your stops are in for when it goes a little higher, and then wait for reversal and sell it short again. Look at the loonie. This is crazy. So this is going to have me look at Whistler to go because the skiing is so horrible in Vermont right now. So Whistler's been pretty good. So the loonie has gotten absolutely just down like 30% in a couple of years. This is terrible. So if you want to go travel to Canada, do it now. Gold. I'll repeat the same thing I said. I've had a tough time getting on board gold. It just looks neutral at best at all times. And gold typically is not bottom like this. It typically has V's to it. So I don't know what to make of this right now. TLT, which I continue to own. I wish I could say that I saw this rally coming. I didn't. It's just one of my quantitative programs that owns it. So I own a big stake in TLT. Trade's fine, but I don't think it's really going anywhere beyond the short term. Crude oil. We are back to testing last week's low. No, this week's low, sorry. There's someone, I forgot where I was. And I think I share, I'm usually really in tune at parties when people ask about stocks and the market and oil, because when people are really, really one-sided, I know we're going the other way. It's the first time I've heard this weekend somebody say to me, can I short oil? So I'm thinking, well, did you short it at 40 or 50 or 60 or 70? No. So I guess we're getting closer, and I said this last week. It feels like these runs are very much like a huge capitulation. You got to be wary of this. A 3-day melt-up which traps the shorts. This could happen at any time. Just be careful. So if you are short, be very careful of a move like this. Natty gas is just, God, oh my God. I think it's all-time lows. Let's see. We are not at all-time lows. Yeah, maybe we are. In any case, if we're not there, we'll be there this week. Natty gas continues to trade horribly. I said we had one good trade here and here. Neither one panned out so well. Now you sit and wait again. Again, when natty gas bottoms, you'll have some kind of rip-your-face-off move, a 3-day short covering rally. Smart money's been, as I've said, has been long natty gas almost this entire year. This entire year, natty gas, people have been, the smart money's been long, and they've not been right. It's kind of similar to copper. People have been locked and loaded long copper all year, the smart money. And we did a pretty good job spotting some good trades. And I'm going to tell you one right now. Copper, once again, looks like it's a long trade. So, one more time. One of these times in a lot of these commodities, when we go, we're going to go hard. But right now, it's trade by trade. You put a stop in, you take your nick, walk away. Don't marry any of this stuff. Okay. Let's see what else we're going to cover. We're going to cover cotton. Yuck. Cotton I have absolutely no opinion on. It's frustrated both bulls and bears. And I'm among them. I have no opinion on cotton. Cocoa. Talked about last week this candle being a transition candle from neutral to a negative move. We had a couple of down days. I think cocoa probably is a short into any kind of strength move. Coffee, will coffee ever have a run? Kind of like natural gas and copper eventually, but it's not now, or probably not now. Sugar, which we talked about being short for weeks and weeks because the trend is transitioning from very strong to neutral and then maybe to down. Smart money is very, very short sugar, but you have to recognize you get a couple of reversal candles here and a follow through. So I wouldn't be surprised to see another little rally in sugar, a reversal, and then you can sell it again. All right, let's see what we got. Questions. With Europe still easing, do you think the market is a bit better? It's not, but I still would rather be in the U.S. market than Europe. Yes, Mark, that is true. The loonie goes with crude oil, as does the Mexican peso, which I used to pull it up. I can't remember what the FXM. I can't remember what the symbol for the Mexican peso is. MP? Nope. I don't know. Sorry.
Let's ask the guy that used to work, what's his name? He made all that money in the Mexican peso. He used to do the seminars, remember?
Oh my God, Mark Shire?
No, not Mark Shire.
No.
The guy in the city, the guy in Miami. Your nemesis.
He's not my nemesis. He's your nemesis.
No, he was your nemesis. Not.
Oh, he was not.
Yes, he was. I didn't even know him.
Wait, Doug?
No, not that idiot. The guy they hired to do the seminars.
Oh my God.
And he made all his money on the Mexican peso.
Brad.
Yeah. Oh, yeah, and you love that guy. I'm sorry.
No, I didn't.
All right.
No, I felt bad for him, but
anyway, MXN they're saying is the symbol. Okay.
Let me go on. No, MXN? No. I don't know. I'll have to find it, guys. Okay. Let's see. Larry at Weiss says the cycles are coming together for gold. He says he's never wrong. Well, I got to tell you, anybody who says he's never wrong means they're almost always wrong, in my view. You got to be able to say you're wrong in the market. And nothing I've ever seen. If something hits with 66% accuracy, that's amazing in the market. And we have a couple of trends. Like we had, I think Tiny mentioned, we hit the Fed on the Fed for a long trade. That was a big trade we had on the Fed. That's one of the trends I gave out at market timing class. And that one, that's one of the best that I've seen. That works, 70+%. But most of the stuff, if you can get it working 2 out of 3 times, it's beyond a home run. The world stopped using natural gas. Yeah. Smart money is below natural gas. Yeah, not too smart, but Scott, usually smart money ends up being right, and they make all their money during the beginning of the move. This has been an unusual time in commodities for this long of a bear market without any kind of significant rally. All right, last call. I think we covered everything, albeit a little quick. Any other questions, comments, concerns? As Tiny mentioned, for those of you who went, I did bonds, but I'm happy to cover it again. Oh, I didn't do, I had a couple things left, sorry. Here's Dimitri, so here's bonds. I own them, but I don't love them, and I don't see a great low-risk setup in either direction, so I really can't offer you any kind of intel on Treasury bonds. I did want to cover is the AD line is going to be no help as well. So here's the AD line. Nothing helpful there at all. Junk bonds got hit once again on Friday very hard, which is good because I think I think junk bonds are approaching one of those, major, significant back up a truck and buy lows. Is it here? I don't know, but I do think it's in the next, I don't know, 1 day to 3 months, which is really not helpful. But I do think you're setting up a phenomenal trade in junk bonds. When that opportunity comes, I know personally I'm going to leverage it up and play it. I think it'll be that good. And this is not like playing Apple or Google or Netflix or Amazon. Junk bonds move much slower, but a rally is very linear. It goes in a beautiful 2 steps up, half a step back, 2 steps. And the plain vanilla, same thing. It looked awful. Okay. Let's see. So Dimitri, see, that's good. You've been shorting junk bonds. That's good. You've been shorting bonds on every pop. That's the way to play it. And if you're wrong, you stop out and start again. I love that idea. James, I have looked at the Baltic Dry Index many times, many different ways, and I've yet to find a great correlation with anything U.S. I mean, the best thing you can say is that it's somewhat correlated to the Chinese economy, but not 1-to-1. So I'm sure there's some people who have found a way to trade it. I have not. John, that is correct. Junk bonds have huge energy exposure. That is correct. And even if, let's say if crude bottoms tomorrow morning, it's not going to fix the junk bond problem. The junk bond problem is twofold in the energy space. So it doesn't matter when crude bottoms, they've got problems. But I think junk bond prices are going to bottom ahead of some kind of resolution. It's not going to be where we see the light at the end of the tunnel and they bottom. They're going to bottom somewhere, and then you'll see the fundamentals turn down the road a little bit. How long do I think the junk bond rally will run? Well, let's just use I'm just picking the PIMCO junk bond fund for no reason, okay? So here is a weekly chart. I think Burwell asked the question or John did, I can't recall. No, this is not long enough. Shoot. Yeah, I gotta figure out another. Okay. So here's the Janus High Yield Fund. When you get major bottoms, like you have in 08 it bottomed, and you had really, 3-year rally in junk bonds, and then you had another phenomenal low. And why is this? Oh, scratch that. This chart doesn't take into account the dividends paid, so you can't look at a long-term chart. It's a mess. Typically, the rallies from major lows last years, but the first good rally lasts a good 12 to 18 months. Sorry about that. That's one of E-Signal's few problems is that they don't factor in dividends. Doesn't oil have to turn around? No, Jay. Oil doesn't have to turn around for junk bonds to recover. Oil needs to stabilize. But they've got bigger issues than oil right now. Oil was the cause of the crisis. It'll be the cause of the crisis, but it won't be the solution to the crisis. Let's see. May, I covered EEM. We had a nice little rally this week, along with FXI. I own them, so I own FXI. So I'm happy about that, but they're going to need a lot more help from the U.S. stock market. All right, any more questions? We're running late, and I apologize. Questions, comments, concerns? Scott, No TV. I was so happy to get invited on Power Lunch last week on CNBC. No TV this week, unless we just bail on going to Vermont, which is a possibility because there's only a couple of ribbons of snow. But in all likelihood, I will set some things up into the new year. Scott doesn't agree with my outlook. That's okay. It's never personal. We don't agree on things. Benji, I couldn't even tell you what the symbol is on the VIX Jets, and I'm not sure I would read too much into it. And Jets looks good. It's one of those leadership groups, and I think it probably remains one of the leadership groups the rest of the bull market. And with that, Tanya and I will talk and see. I must have a couple of hundred stocks on a potential January effect list. So we'll see if we decide to do one. Regardless of what other people have said, and I've heard other people's ads that it's the trend that never fails and blah, blah, blah. Meanwhile, it did not do well last year from memory. Tiny may remember it differently. And then I think in 2011 it struggled. It has not been the layup, shooting fish in a barrel trend that it used to be. Doesn't mean you can't make money, but it's become more difficult. All right. Thank you all. We shall be, God willing, we'll be back next Sunday night. I will, God willing, be in Vermont. So not looking forward to 50 degrees up there for the next 5 days, unfortunately. So a lot of adult beverages, a lot of eating, bowling, trips to Manchester. Yeah, Scott, I know. I actually looked at airline tickets to go to Utah this week instead of going to Vermont, but they're too expensive. I'm not going to spend. I think they're like, to go direct was like $700. So family of 5 plus everything else. Not going to happen. Although I am coming out to go to Kirkwood in March, so I will be there. Hopefully the snow will still be there. All right, guys. Thank you. If for those celebrating Christmas, a very, very Merry Christmas. And I hope it's a fantastic holiday. Kwanzaa, whatever you celebrate. But we'll be back next Sunday night, God willing. And I'm praying that I could pay Tiny off on the bet to buy him a steak dinner anywhere he wants. The Tiny, start finding that restaurant. I went to Ben and Jack's Steakhouse this week in the city with 2 of my favorite clients, which I would rate as very good. Food was excellent. My steak was great. So that is all. Tiny, anything else, or are you asleep? Okay, you're asleep. Good. See you guys next week.